Yo, what's up, everybody? It is Tuesday, January 14th. We got 6 more days until Trump takes office. And I've been telling all you guys, just let's wait. Let's wait to see what's going on. I don't know where I'm going with this video. I'll just tell you in advance, but I'll just issue a disclaimer that my language might get a little salty in this because I don't know, I'm pissed. I'm pissed off. Talking about bonds, let's talk about bonds. I've seen a lot of articles about how, this has never happened before, and they're alluding or commenting on the fact that the Fed cut rates, but now bond yields are going up. By the way, before I even get into this, let me just point out another thing which is completely ridiculous. Remember, like over a 5-year period that just recently ended, we were being warned, like constantly being warned, that the inverted yield curve was the greatest predictor of a recession ever. It was the foolproof, magical predictor of a recession. And I kept saying, it's not. That might be true under, a gold standard or a fixed exchange rate regime or something like that, but, not in the current reality. I kept saying. So that never happened, okay? And then now they're saying, because the yield curve steepened, now they're saying that's the bearish indicator, the steep yield curve. So like, fuck, what is it, man? Like I've spoken about this shit in the past. Like, you cannot have contradictions, like blatant, overt contradictions in your arguments, in your theories, that you just gloss over these contradictions. It's like, okay, if that theory is not working out, you just flip it around and pretend like nothing ever happened. Okay, that's bullshit. That just doesn't work. That doesn't fly. I'm sorry. Anyway, getting back to the story or what I want to talk about. So we see a lot of these a lot of commentary, a lot of stuff online about how this has never happened before. The Fed cut rates and now the bond yields are going up. And, newsflash, it not only has happened, but it's happening for a reason. I mean, the Fed coming into the first round of rate cuts, what was it, like in March of last year? The Fed built up everybody's expectation about now we're going to start to lower interest rates. The market jumped ahead of that. Remember that all the Fed can really do, well, not all, but what the Fed tries to do is set what's called the reaction function on the part of the market, like to kind of communicate to the market what it wants to do, and then it kind of, allows or lets the market do that. So like everybody jumped on that. The rates went down, 10-year yield went down to like 3.6, I think was the low. And then, the Fed did a 50 basis point cut, then it did a 25 and a 25, and then it started to kind of hold back. And, we got it down to 4.25 to 4.5 on the benchmark 10-year. And so rates came right back up because the Fed said, okay, now we're going to hold at this level. So we got back to the 4.5, but now the Fed has been communicating all this hawkish nonsense. Look at today's PPI. The month over month PPI was like 0, I think. The core was like up 0.2, or maybe that's the inverse. The headline was up 0.2. The forecast was supposed to be up 0.4. The core was at 0. Okay, that was supposed to be up 0.2 or 0.3. So it was like way below, what they were expecting, in line with the macro trend of inflation coming, towards its target. But meanwhile, it flips around and it starts signaling to the market that, oh, hey, we got a problem here. Inflation's not coming down. I mean, dude, look at the freaking data. You're supposed to be data driven. That's what they tell us all the time. You had a 0 print in the core PPI. Okay, tomorrow we get the CPI. We'll see. But I mean, That's the data, okay? Here's what really pisses me off, all right? You got speculators now, because, and that's what it is. If you look at futures, if you look at the CFTC's Commitments of Traders report, speculators hold the largest short position in the 10-year treasury, okay? They've been the ones selling, pushing down the treasury price, driving up the yield, okay? The Fed is a freaking monopolist rate setter. I'll tell you, if I was the Fed, all right, I would crush those guys. The Fed has unlimited power to crush and destroy. Can you imagine if John D. Rockefeller, back in the day, you know, the early 20th century, Standard Oil, if some of his little competitors were trying to undercut his price or steal his customers, he did destroy those people. He ran them out of business. If I was running the Fed, I would fuck these short speculators up so bad. I would drive their short positions so far up their ass, they would not be able to sit down for freaking months. This is ridiculous. You know, I've never been one of these guys who says, like, end the Fed. You know, you got guys like Rand Paul in Congress, end the Fed, end the Fed. But now I'm starting to think, you know what? Maybe that's not a bad idea. Because why do we need a Fed, which is a monopolist institution created by Congress with the power to set rates, with the unlimited ability to credit reserves to the banking system, okay? In other words, it can buy whatever it wants, basically. Why do we have an institution like that is just ceding its responsibility to a pack of speculators who know nothing, by the way? They all got it wrong with the rate increases, all right? So, like, allowing them to set interest rates for the United States of America, when we have an institution that is capable and has the power to set the rate wherever it wants to set it, but yet is still handing off that responsibility to a group of unaccounted for speculators. I think this is the craziest thing. And now I'm kind of on board with this end the Fed idea, because it makes no sense to me to have an institution like this. I think one of the worst things they did was this Humphrey Act back in, well, it was 1974, which gave the Fed, and I talked about this in a previous video. I said that act gave the Fed the responsibility to meet the president's economic targets. And the Fed doesn't have that power. It has very blunt tools, mainly monetary policy, to do that. And the only thing it understands through its, you know, this institutionalized monetarism orthodoxy that it uses as the lens to see everything, is like, it's all wrong. It's like if inflation is going up, you raise rates, which does nothing more than raise inflation, all right? Or if inflation is coming down, if the economy is slowing down, you cut rates, which does nothing more than removing interest income transfers to the economy. I mean, it's ridiculous. And it really pisses me off that the Fed is allowing this to happen. A bunch of unaccounted for speculators setting bond yields when the Fed has the power to crush them, to drive them out of the market, to set the rate wherever it wants at any point along the term structure, and it wouldn't even have to do anything. All the Fed would have to say is that we now are setting rates at zero permanently, and the whole entire curve would go right down to zero, because they understand that the Fed has the power to do that. But when the Fed, and you know, this is primarily, I'm talking about, really it has reached like such a height in terms of its, just following of the market. This is the Powell Fed. Other Fed chairs have also done this, but none to the extent that we're seeing it with Powell, okay? His flip-flopping, what that really is just him, following the lead of whatever the speculative cohort is saying at any particular time, all right? If you look at bank data, they have record holdings of treasuries. They had to build that back over the period where they had to dump all those treasuries because of Fed rate increases, okay? Because according to bank regulatory rules, they had to mark to market all those treasuries that they held as assets, which are as good as anything, as good as cash. They had a mark to market and they were taking losses on that. So either they had to raise capital or dump those things. So they dumped them. They bought them all back and then some, okay? Banks, the bedrock of our financial system, and you have speculators. How do I know this? I'm telling you, because banks have record holdings of treasuries now, having recovered from the debacle of the Fed raising interest rates for whatever it was, 16, 18 months. In the futures market, they are long, they have a net long position in treasuries, okay? So the banks own the treasuries. Who is selling? It's the speculators. So the Fed has handed over basically rate-setting policy, which it has the monopoly over, handing it over to a group of speculators, leveraged funds that are just playing. I mean, this is unconscionable. This should not be happening. It is fucking ridiculous. The Fed has the power to crush these guys. If I was running the Fed, oh boy, would I have some fun. Let me tell you, would I have some fun? There were a couple of times in my past when I was a floor trader. I maybe talked about some of these moments that I had when I was either executing some orders for big customers or when I had a connection. I talked about that, where I was able to jack the market around. All right. And of course, I'm not the Fed, but, I had a power. Short term, nonetheless, it was still a power. The Fed has unlimited power to do it. If I was running the Fed, boy, would I have some fun right now with these guys like, Drunken Miller and Paul Tudor Jones and Goon Block and all these guys who know nothing. And I would crush them. I would absolutely, how much fun it would be to run those short positions right up their asses? You know how much fun that would be? Think about it. And there have been times when the exchanges themselves have taken action against speculators. Some of you, most of you are too young to know about this, but I've been around, all right? In the 70s, in the late 70s, and the leading up to like around 1980, the Hunt brothers of Texas, they were a very, very wealthy oil family. Mainly it was the sons of the patriarch. They were running a corner in the silver market. A corner means they were trying to amass a position that controlled the global supply of silver, and they were doing it through the futures markets, okay, in New York, through the COMEX. And over a period of years, they were accumulating a gigantic, a massive silver position where the bullion dealers, those are the physical metal dealers, they're always short, pretty much always short, because they hedge their physical inventory. They couldn't meet their margin calls anymore. And the Hunt brothers had these guys by the balls, at least they thought, and they were squeezing them, and the price of silver was running up and running up and running up. And the exchange had a meeting. And the chairman of the COMEX at that time, a guy named Henry Jarecki, Dr. Henry Jarecki, he's a psychiatrist. I met this guy. It's a whole other story. I met this guy in a bar in Manhattan one time, and he recounted the whole story. Henry Jarecki and the board of the COMEX declared it a liquidation-only market. In other words, they changed the rules of the game in mid-stride. And the only thing anyone was allowed to do, you couldn't buy, you could only sell. And in an instant, the silver market collapsed and it wiped out the Hunts, who were at that time the richest family in America. They were worth something like $5 billion. And the same thing happened, I remember, it was probably in the early 90s, if I'm not mistaken. I was trading in New York. I was a COMEX member, but there was an Italian grain merchant firm called Ferruzzi. Ferruzzi was a big grain processor out of Italy, and their head guy, and I forget his name right now. He was a flamboyant Italian swashbuckling guy. They were cornering the soybean market. Same thing like the Hunts. They amassed this giant position to corner the soybean market, pushing prices up. And you had like farmers and agricultural firms who are usually short. They were getting squeezed by the bulls. And the exchange did the same thing to Ferruzzi. Oh, the guy's name, I remember. Raul Gardini. Look it up, Raul Gardini. The price of soybeans collapsed. And Raul Gardini, he killed himself. He put a bullet in his head. He committed suicide. The Fed has unlimited power to crush these guys. You can't sit around, Powell can't sit around and scratch his head and say, oh gosh, yields are going up. I wonder what's happening. No, you know what's happening. You've transferred control of rate setting to a group of speculators. This is unconscionable. You got to crush them. If I was there, I would, not only would I crush them, I would take so much, just happiness and so much satisfaction in crushing these guys. Crush them, destroy them, show them who is boss. The numbers are going in your direction, Powell. Don't let these guys, and then all these stupid articles and CNBC, gee, I wonder what's happening. Yields are going up. Well, yeah, because Powell is signaling this weakness, this inept weakness, like a weak dog with his tail between his legs. I mean, you're running the fucking Fed, all right? You have unlimited monetary power. It's pathetic. It is pathetic. Anyway, tomorrow's CPI. These guys, by the way, they have control. And I'm not talking about the Fed. It's these speculators are in control right now. And you saw today's number. Today's number was very, very good. That should have triggered a rally in the bond market, but they are sitting on it. They are sitting on it for no reason. Now, we're going to need a string of unfortunately, now we're going to need like a recession because it's not going to break their grip on the market. It's not going to break their grip. They know they got the Fed by the balls. They've convinced Powell that he was wrong, and he wasn't wrong for cutting rates. Rate cuts are what lowers the inflation rate. Okay, we've seen this all over the place. When they raise rates, what happens? The inflation goes up and the currency dives. He wasn't wrong, but these guys have convinced him because he's weak and he has his tail between his legs. Go back to being a lawyer. You fucking suck as the Fed chairman. You're terrible. Go back to being a lawyer, a securities lawyer. You don't know what you're doing. You're running an institution that was granted powers beyond anything else by the Congress of the United States, and you don't know what to do with that. That is bad. It's a bad thing. Anyway, that's it for today, folks. Please like and subscribe. I'm sorry for the language, but you can't have this. We can't allow a group of these unaccountable people to be dictating, and this affects all Americans and all businesses. They're all short and they're all selling, and they should be crushed and run out of the markets. That's it for today, folks. See you tomorrow. Bye.